Hello family, I hope all is well with you. Today I want to cover adjusting your stop loss when you're in a winning trade. That way you don't get kicked out of the trade so early. So without further ado, let's go ahead and get started. So I'm looking at NU in replay mode, and right now, as you can see, this market is trending up, but it is at a level of structure where this market is showing some sign of exhaustion with this wick. So my next step will be to kind of watch and confirm that the market wants to turn around before I start selling. And the way I would do that is identify my starting point. Remember, when using the original starting point strategy, you're looking for the last selling candle before it pushed the market above previous structure, the previous high, which would be this candle right here. It's kind of like supply and demand. And so when the market closes below this area, I'm going to look for a retest to take the sell. So right now, I'm going to go ahead and move this market forward. And as you can see that the market broke through, and then you can go ahead and place your entry at that level. So as the market is continuing, hopefully continuing down, you do want to set your chart up to where you're always trading on the right side and you're setting up your charts on the left. And what I mean by that is, if this market continues down, you want to be prepared to have your other starting points identified. That way you can adjust your stop loss and stay in the trade a little bit longer. And so what I mean by that is, for example, let me go ahead and take that off. Until you get a pullback, right now you're going to use what the data you have to the left. So I'm going to move this market forward. That's your entry. And I'm looking for the market to break this next starting point before I even think about adjusting my stop loss. Remember, your initial, and I forgot to mention, your initial stop loss is going to be above the high or whatever rules you establish. So this is your original stop loss right here. And so you're still in this trade, you're in profit, you take your entry down 78 pips, kudos to you. And now the market has broke structure again. Remember, the market will always pull back, okay, because it has to fill those orders, those buy orders that may have been sitting here. So the market will always pull back. And if you would have moved your stop loss too soon to this next area right here, you would have gotten kicked out the trade with this wick. And so that's why I say wait until you get this pullback, okay, into the zone again. Now you have another starting point right here that you can use. You wait for the market to close below, break and close below that, okay. You also want to confirm that the market retests that area and continues down before you adjust your stop loss. As you can see, it did that. Move this up a little bit faster. Sorry. It continued down and actually pushed below that level. So now that you're in the clear, you adjust your stop loss above this swing high. And you're going to continue to do that as you identify more starting points and the market continues down. And that's how you can stay in this trade, in your trades, a little bit longer. So just to recap, so we're all clear. You wait for market to break and close below your zone. You have your initial entry here and your stop loss above the high. Okay, you identify some areas of structure to the left where you're waiting for the market to close below and then retest that area. Okay, when the market creates another swing point, which is this swing point, this low right here, and it closes below here and creates another swing high, then you can go ahead and adjust your stop loss here. So you'll move at this point, let me move this over. You'll move this original stop loss to here after it closes below and retests and continues down. Once again, when the market pushes below this zone right here, retests and pushes below again, you can go ahead and adjust your stop loss. I hope this is not confusing. If it is, back test this weekend or on your off time so you can slowly understand the process. It's like You're walking down the stairs slowly without running so fast to where you trip over the stairs. You know, you're waiting for the breaks and close below the swing lows. And this is for a downtrend. It's the opposite, obviously, for an uptrend. So you just reverse it. So you have your entry here. Market breaks and close below the swing low. Creates another swing low. Breaks and closes below that. You're always one stop loss, one swing high above the current one. So you just slowly move it down as the market continues to break lower lows. So, all right, everybody, that's all I have for you today. Happy trading. Let me know if you have any questions. Please like and subscribe, comment below. And until next time, I'll see you guys later. Love you.